Good evening, everyone. Welcome to Madge Lewis Scholarship Foundation. We are a 501c3 nonprofit organization, and our mission is always to give back, to share, and we only share because we care. We are on a quest to educate and to share as much knowledge, to give as much information as we can to the world and to our young people that they can have the tools they need to be successful. We are on the series of Financial Toolbox, and this evening we will be featuring another presenter in this series, Financial Toolbox series. And our meeting this evening is give yourself some credit. So I'm going to ask as you come on to share. Go on Facebook, share with your friends, share with your loved ones, share with your young people. The market is ripe. There's a lot of things happening in this season, a lot of financial opportunities coming up. You're all looking forward for your $1,400 and $1,200 and whatever dollars you're getting in the stimulus. And what better time to learn about your credit and learn about what you can do with this money and to invest and to put it where you need to put it and prepare yourself for this season of financial outbursts when all this is happening. For you to do that, it's important for you to have good credit. It's important for you to understand your credit. And a lot of us, I've always said that credit is something they should teach in high school, because a lot of us just want a credit card and we want to shop, we want to spend, want to see how much cards we have, but we have no knowledge of what it means to have credit until we need to buy a house or a car or something. And it's usually too late because the damage is already done. For this evening, we have a great, very knowledgeable presenter, somebody who is the CEO of the credit group. This is her wheelhouse by all means. She is, and I'm going to get my glasses right here while you're sharing and liking and coming on, and make sure you get your friends to join. She is a leading national expert in consumer credit matters. She has amassed a wealth of experience spanning over 19 years as owner and senior analyst of the credit group. She possesses a detailed understanding of the credit bureaus and their operations. Ms. Mcleod has worked both in private and government sectors and is known for her ongoing philanthropic work within the nonprofit community. So welcome to another nonprofit organization and local groups and organizations. Ms. Mcleod is also a notary public for the state of Florida and is affiliated with several private entities. Professional, focused, passionate, and attentive are some of the words that describe her character. As a businesswoman and mother, she balances her professional and personal life with the highest level of dedication and commitment. As the president of Madge Lewis Foundation, Joma is somebody I know personally because she's affiliated with Victory Place International. And it is my pleasure to introduce to you our guest speaker this evening on giving yourself some credit, our presenter, Joma Mcleod. Joma?
Thank you, Carlene, and thank you for the Madge Lewis Foundation for having me on this platform. It's a great honor in being here that I can be able to educate as many persons as possible when it comes to credit, whether it's fixing, understanding, and just building a better credit report for yourself. Because like they say, having a better credit gives you a better lifestyle. And it's not to say that you want to, use credit to live on, but it's also for those emergencies that comes up, that those unforeseen emergencies, like a lot of us that are facing the pandemic right now. So thank you guys for having me. Here to answer as many questions as you guys like. So our listeners, our viewers, they can be more informed about how credit works and what it means to have good credit and keeping it intact for themselves.
Thank you, Joma. Are you ready to share? And while she's getting her screen ready to share, please feel free to put your questions and comments in the chat. I'll be looking at them as we go along, and we'll get to ask all our questions in the end. And guys, please ask whatever questions you have, because this is to prepare you for the future. Go ahead, Joma.
Absolutely, Carlene. And that's the thing with sharing and asking questions is so important. A lot of us are so scared of telling about ourselves, what's happening with us. So I want you guys to know that if you don't ask, you will not know. If I have not said anything that may trigger you as far as your situation, but ask questions. And like Carlene, that you said, share, because for folks that are not on here right now, not able to be logged on, at least later on, they can go back to this video and they can see what credit entails. So I will begin now on the first step of understanding your credit. You have to monitor your credit report. It's important that you do so because credit changes very rapidly, whether it's every day, every month, every quarter. Things can happen because we sometimes do get in trouble or we're not able to pay our bills late. So using platforms like Credit Karma, and of course, I want you guys to understand that with Credit Karma, it does not provide you always an accurate credit score. Their platform is based on a demifying score. So it's not your real credit scores because they're not partners with the major credit bureaus. And for a list of the credit bureaus, a lot of us know them as Equifax, Experian, TransUnion, but there's also companies like Sage Credit Bureau, Innovasive, you have Dun & Bradstreet for your business credit. So not only that, the credit group focus on a personal credit profile, but we also specialize in business credit as well. So if you're not monitoring your credit, please, it's so important that you monitor your credit report so you can see the bad and the good. So begin with the bad. Always look at the bad first. And the reason for that, when you have negative items reported on your credit report, it will continue to reduce your credit score. And of course, the goal is always that you increase. You want to achieve the highest score possible. So you have the bad and then you have the good, or for Experian, how they report their information. It's always the good first and then the bad follows. Using your stimulus check. A lot of persons are asking me, hey, I'm getting this $1,400 for myself and maybe 3 or 4 other kids that you may have. And I say to them, really analyze your situation, because it's not always that you want to use your stimulus check to pay off bills. Because what about the light, the water, the cable, your mortgage, your rent, the most important things that will keep you going, and your family. But if you know that you're on time with all of those things, then of course, jump on over to taking a look at the negative things on the credit report. Because another thing I notice is that when you have good credit, good items, good trade lines, as I will call them in my sector, they tend to say, you know what, I want to pay off the Discover credit card. I would like to pay off the Capital One, the American Express. I want to pay everything off. But here it is that you have the collection accounts on the report. And what that will do when you pay off the positive accounts that are on your credit report, your scores are going to increase. And you may gain 20, 40, 50 points, and that's wonderful. But what's going to happen is when you get into disputing the negative things on the report, it may come off and it may not. And if it does not it's not removed off the credit report, then what the creditor or the collection agency, as you guys will call it, they will now re-age that debt on your credit report. So now it looks as if it's a new collection account on your credit report. So you have to do due diligence. When you see a collection account on your credit report, ask yourself, do I owe this? Has this account passed statute of limitation, meaning that it's expired, it's gone over the 5 to 7 years, meaning the state that you live in? And not because it's past the statute of limitation, 5 to 7 years, they have to remove it off the report, but they can then re-report it or sell it to another agency. And that same collection account that's been there 7 years, it's now back on your credit report again. The statute of limitation for 5 to 7 years only means that if that one company, let's, for example, use Radius. Radius Financial has a collection account for Joma Mcleod, and they've been reporting this information for the past 7 years. That's when the law kicks in and they have to remove it. And it only takes a phone call for them to remove it. Tell them it's past the statute of limitation. This account must be removed off my credit report. And they have what you call their credit reporting department, and they will remove the account off the credit report. Some companies, they report once a week, once a month, or some every 3 months. You have to know the difference and ask these questions when it comes to your credit report. But if this is a legitimate collection account that you owe, I would like for you to ask them, what's the amount that I can settle? And don't be afraid to settle with debts that you owe. And you could also ask them for a deletion. For us, a lot of the companies will charge us an additional, $7 to $12 in removing a collection account off your credit report when it's been satisfied. Most companies won't do it for the average consumer, but for the credit group, it's been 20 years. We're in our 20th year, and they do a lot of amazing things for us because, of course, the cleaner the credit report is the better for you with obtaining new credit. So don't be afraid to speak with them. I told this story the other day, and I'll tell it again. I had a client that she had a medical bill for $1,400 that was reported on her credit report. After speaking with doing, research, speaking to the medical office, they actually only had her owing $728. So that collection agency was reporting that one account, that one single debt, twice on her credit report. And it was something that, of course, she did our first time home buyers class that we're partnered with Housing Foundation of America and with HUD, where they're able, because she was in the loan process, we were able to settle that debt for $228 and also have it deleted from her credit report. So sometimes you have to, it's just that important that you do have to pay those old debts that you owe, because it may not be removed off the report and they will continue to damage your report over and over again. Another client that I had just recently, and I'm going to go into inquiries, okay? The myth is if you pull your credit, you're going to lose credit scores. That's a yes and no. And the no part of that is you're allowed 3 times a year to pull your credit and not to be credit score affected. Okay. So you can say, you know what, I need to build credit for myself. Various things that you purchase a vehicle, all these different things that you have to do. So you have to pull your credit because the lenders, the creditors, they want to separate the good from the bad. And that's when you go into the interest rates. Of course, the higher the score, the lower the interest rate. The lower the interest rate, the lower your payments are going to be. But as far as with your inquiries, you're allowed 3 times a year to pull your credit, not to be credit score affected. So you don't want to go over that realm. And that's why I come back to monitoring your credit report through Credit Karma, Credit Wise. Those are really good platforms because you just want to see what is the bad. Okay, and get rid of the bad things that are on the credit report. And after you take care of the bad items off the credit report, then you get into the building stage. And it comes back to, that's why, not always that you want to use your, that extra funds that you have on the side to pay off bills when there's still outstanding negative things that are there affecting your credit file. Take a look at the negative things, analyze those situations. One of the things that you look for are, has an account been transferred? And it tells you when you pull your credit report, you're going to see if this account has been transferred. If it's been transferred, that's when you get into the disputing items off the credit report, which is sending letters out. At the credit group, we deal directly with the companies and getting things off our client's file. So pay attention to those different wordings, transferred, the last time it was updated on the credit report. Maybe it was 2014, 2015, because sometimes it becomes a dormant of a file. with the companies, and it's just not they're just not collecting on the debt anymore. So pay attention how the information is being reported on the report before you begin to send out dispute letters for yourself. And then when it comes to, back into inquiries again, if you go to purchase a vehicle, a lot of times the bank they're going to shop, that auto dealership is going to shop your loan. And shopping your loan, meaning that you're doing one credit pull and they're sending it out to maybe 10 or even 20 different banks to see who's going to pick this loan up for you. That is considered a one inquiry. Okay. However, it does look on the credit report as if it's a million, it's so damaging to the report. So you have to know the difference. And when it hurts you, that only means when you pull your credit, let's say you go to Mercedes-Benz and you pull your credit with them, make sure if you're shopping, this is for folks that are shopping for an auto loan, you have to choose a month, believe it or not. Because when you go into March, April, May, then that's when you're negatively affecting your credit scores by the different months. But if you shop for that loan that 1 month, and they could pull your credit 30 times, it does not matter. That only means one inquiry on the credit report, okay? So be mindful of those things when you're pulling and applying for the different things on your credit file. Let me go into, now I'll get into student loans, okay? That's a huge subject right now that everyone, because of the pandemic, student loans, all student loans are deferred. Now, if you're someone that is not looking to purchase a car, purchase a home, or to do anything with your credit, leave it in deferment. It saves you money. You don't have to worry about it. You only need to focus on the most important things, which is staying alive, paying your bills, of what that is important. But if you go to a lender trying to obtain a mortgage and your student loan company has not reported you in the last 6 months, that could be an issue. Always remember, if I'm knocking at your door, you don't answer, I'm going to believe that you are not home. Joma is not home. And that's what credit does for you. Just as the same as with your credit cards. There's so many options that are available today because of the pandemic. Your credit card company would say, hey, would you like to skip a payment, put it behind, put a certain amount behind, and you can pay catch up later on when things get better for you. But always remember, for those folks that are looking to build their credit, purchase different items, and they need to have a good credit score, you cannot do that. Because if their credit card companies are not reporting, your mortgage companies are not reporting, it's not going to be possible for you to obtain a new loan or to do anything, because they need to see your last payment history. And it goes with your algorithms with your credit score. They need to see your patterns. What you're going on with. What is Joma going on with? Is she paying her bills on time? Is she not paying her bills on time? So you have to monitor your credit so you can know the good and the bad, the ups and the down, and position yourself. So when you walk into the bank applying for anything, no one is telling you, oh, I can't approve you for this because your payments have not they're not being reported. And I have quite a few clients that are coming back and they're telling me that, hey, I can't get this loan because I need the company to report the information. Now, all of those payments that they've missed, they have to make up those payments, okay? In building your credit, the easiest way of doing that is to obtain a secured card. But again, time have changed. We're in a very different time. 5 years ago, you could have gone to the bank, applied for a secured card. And a secured card, for those of you that do not know, a secured card is when you put your own money up, meaning you give the bank $500 and you use against that credit amount that you've placed, okay? Now, it does not mean that because it's your money, you don't have to pay. You do have to pay it as if it's a bill. because you use it. And of course, it's your own money, but you're using that $500 as leverage. So it's important that if you place $500 on a card to establish credit for yourself, you must, and you use the card, you must pay that card back on time. And after about 3 to 6 months, they may convert that from a secured to an unsecured line of credit. So that's one way of building your credit. The other way is you can also, if you know someone that has great credit, you can, what I call piggyback, and you guys may call it authorized user, AU accounts. There's so many different names that I hear. Authorized user accounts is a very slow process. I've had clients where, and still do have clients that they choose not to use our credit builder program, but to do it on their own. An authorized user is also have changed in gaining credit scores for yourself, meaning that someone has added you on to their credit card. And of course, make sure it's on time, because when they're late, guess what? You're late. So you have to be careful about when you add yourself as an authorized user on someone's credit card. It does help, but it's a very slow, I call it turtle, okay? It's more of a turtle action for me because it moves so slow with building and gaining. You can have a $30,000 limit as an authorized user on your credit report, and you still can't get approved for not even a $2,000 credit card. So you have to know the difference. So if you need to build credit, my best, and you're not able to do our the credit group credit builder program, which is an unsecured line of credit where we report to all 3 major credit bureaus to establish credit for you. I call it a blind eye. We're basically putting a blind eye over and saying, yes, I'm going to approve Joma for credit, give her a start, because everyone is denying her for credit. So I'm going to give her just a boost with a line of credit so she can help herself in gaining other credit. That has been the foremost best way of building a faster credit for yourself. I can tell you this, my 20 years of being in this industry, the secured card, it works. The authorized user, it's okay, but it's not as powerful as gaining credit, because on your credit report, when you see, let's say pair one, you have pair one, you have, if it's an individual account, meaning your account, you opened, you applied, you were approved for this credit. Moving on to when you opened the account, what's the credit limit, what's the balance, all of those things are calculation of your credit score, okay? And just to jump over, and a lot of people also tell me one bureau is better than the other bureau. Here's the thing, you guys, no one is better than anyone when it comes to credit, whether it's Equifax, Experian, and TransUnion. For Equifax, that only means, for one, Equifax was the first company to be established as far as a credit bureau, okay? And they're the least expensive company to report to. So that's why you have a lot of companies that use Equifax, and you'll hear the myth of Equifax is the worst. But sometimes you have TransUnion that you may see a collection account with radius that you will not see on those other bureaus. It's all about who the company reports to. And that's why when you have a credit card, and you're paying your credit card bills, you're using, part of your stimulus check to pay off a credit card, ask that company, when do you guys report? Because believe it or not, you have a lot of people that pull their credit on a daily base, a weekly base, a monthly base. I mean, 2-3 times a day, they're trying to figure out what has changed on my credit report. And the simple way to go about that, don't stress yourself out. Okay, do not stress yourself out. As if you pay off your Discover card, ask them, Discover, when are you going to report? Because for me, it may be the 15th of every month or the 10th of every month. And for some folks, it's the 25th of every month or just the 1st of every month that they pull the credit report. So you really don't have to check your credit file. And it comes back again to monitoring. Always monitor your report, because you would, of course, get the alerts when the credit is pulled, when your balance changes, um, anything new hits your credit report, anything that's removed off of your credit report. Those alerts comes in, and that's what's important. You want to know the good and the bad of what's affecting your credit report always. And the emails, the first thing that we all do in the morning, what we do, check our email, go to our social media platform, okay? And by the way, let me give myself a little plug here. Please, you guys, go online to on IG, follow underscore the credit group. Our business page, please underscore the credit group. So you can keep informed of, being on platform like where I'm at MLSF, where that anytime that I try to do it as often as possible. Anytime that we're going to, do anything for any nonprofit organization, a class or informative class like this, we post it on there to keep you guys informed and stay on top of your credit. Monitoring is important when it comes to your credit report. So with using your stimulus check, my advice to you, take a look at your credit report. Right, what I've noticed in the past weeks for Credit Karma especially, that they've been wanting ID. They've wanting you to send in your social security card, copy of your social, copy of your driver's license. And that's okay to do. But also remember, they're free because they're building their database, their platform. And not every offer that is sent to you is an approved offer. So be mindful of those things, not because you get the pre-approvals in the mail, you're approved and you can use that to build your credit. They're collecting data to also sell your information off to other companies. And that's why you get so much of those unsolicited phone calls that you're like, wait a minute, what is this scam call coming from? What I didn't sign up for this. Where did they get my number? That's because you may have filled out an application and you've given them the permission to pull your credit report or to contact you because they're selling information on the credit report. When you do have the Credit Karma platform that you're using, set yourself up with Experian, because for Credit Karma, they only provide you Equifax and TransUnion reports. So you have to know what's on your other reports as well. So back as I was speaking about with your student loans, if you're looking to purchase a home, purchase a vehicle, and not always purchase a vehicle, but most importantly, if you're purchasing a home, they want to see some type of payment history. So you do have to go back to that, whether it's a collection agency that have your student loan or Navient that has your student loan, and get on a payment plan with them. They have the forbearance, they have the 0 month. It all depends on your family size and as well as your income. And I'll pause for just a moment. If Carlene, that you want to jump in and say anything, or I see Shane here is asked a question. Is there anything that can be done about late payments on your credit report? Absolutely. Late payments affect you tremendously when it comes, because that's actually 30%, 35% of your credit score buildup. Okay, so you have basically 5 components that makes up your credit score. You have your amount of debt that you owe is about 30%. You have any late payment history. So this is why it's so important that if your credit scores is in really good standings, make sure that, and you have a lot of credit cards, get on an auto pay, because that one late payment history can be so damaging to your credit scores. And you don't want that to happen, because if you lose 50 points, I had a client just the other day that lost, what was it, about 60 points, 61 points. I was telling Pomoa about the story, went late, and I think it was about 60 points that she lost just by one late payment history, or was one collection account. So it's important that you stay on top. So with the 35% goes with your late payments. It's about 15% of the length of credit history. Meaning, when I first started speaking about the bad and the good on the credit report, meaning accounts that you've paid off. Let's say you paid off an auto loan with BMW. It's zero balance, but it's still being reported on your credit report. It does not mean that because I paid this debt off, I need it off my credit report. No, you guys, you have to leave that alone, because that old credit, that's what I call it, that old trade line that's there that you've paid it off, it's telling me a couple of things about you. It's telling me that you do know how to pay your bills on time. You satisfied a debt without any hiccups. And it's in this day and time, it's very difficult for us to even do that. And it tells me that you are a person of character that understand that your credit is important to you. Okay. So for that old credit that is on your credit report, whether it's Capital One, JC Penney's, all of those old things that's been paid zero balance, leave those alone, because they can actually help you in gaining new credit back again for yourself. Okay. And the other part of your credit that makes up is the new credit. When you apply for credit and you are approved, it says that you give that's about 10% of your credit score. Okay. So you have to know the numbers. You guys can go into FICO, Fair Isaac and Company, FICO, and do what is it called? Credit score range. Okay. Credit score range. Take a screenshot of that and you will see the wheel. There will be a wheel and the graph of the 35%, the 30%, the 15%, the 10%, and you know how your credit scores is made up. What are all the components that makes up your credit score? And I'm jumping all over the place so I can give some, some more informative and understanding. And for the Shane, when you ask, can late payments be removed? Absolutely. I would not be in this industry for 10 years if it wasn't possible. But again, a lot of times we tend to send out those letters, those dispute letters saying this is not mine. Not always that you want to do that, because what if this account, you've had it for 5 years and you've been paying it on time for 5 years, 8 years, 10 years, but you've only just acquired this one late payment history. You don't want to have that entire account removed from your credit report. You would only like to have that one single late payment. It's simple. It's simple as just call in Discover and say, hey, I made a hiccup. I missed the payment. I didn't get the mail. Whatever excuse. I'm not telling you to lie because my pastor may see this. Okay. And I'm not telling anyone to go and tell a lie. Okay. However, whatever the situation were that caused you to be late, you can always pick up the phone, letting them know the reason why you were late, and they will grant courtesy. They will grant you a courtesy and remove that late payment from your credit report without removing the entire positive account from your credit file. Okay. So, understanding that for some people, they come to me and they said, you know what, I disputed all the things on my credit report and it was removed. And another person may say, I did all these disputes and everything came back, it belongs to me. And that's why I don't believe in companies or have any respect. I'm sorry. I have no respect for any company that charges a monthly fee for ongoing for 2, 3, 4 years. I won't say any names, but I feel that we all know these companies that will charge you $49 a month, $69 a month, $159 a month to fix your credit. It does not take that long to fix your credit, for one. And when you're disputing anything on your credit report, you're only able to send out dispute 3 times. 1, 2, 3. That's it. After that third dispute, it's considered a frivolous dispute. So that means that you are not being honest, you are lying, and it's even more damaging to your credit report. Okay. So, yes, of course, all of those can happen with late payments being removed, collections being removed, judgments being removed, repossessions being removed. Had a client, so many clients where that they had a repossession and they said, oh, they didn't come and take the vehicle. I turned the vehicle in. Like you boasting up your chest, like I gave it back. You know, it doesn't make a difference, Carly. It does not make a difference whether you gave it back. Amari, can you get my charger, please? iPad is dying. Give me a charger. It's in the room. I'm sorry. It doesn't mean because that you voluntarily turned the vehicle in that it doesn't look that bad. The end of the day, a repo is a repo. Okay. But what you have to do, you have to find out how much they sold that vehicle for. What's the amount? Because you may have taken the loan out, which was $20,000. They sold the vehicle for $10,000, and they still have that $20,000 amount still reporting as if you do owe it. And in actuality, you do not owe it because they took the vehicle back, they sold the vehicle. But in a situation like that, find out, listen, I want to offer you $1,000 to settle out this debt. And a lot of times they will, believe it or not. Because when you purchased a vehicle, the interest rate was about, 24%, which is ridiculous. And that's why I tell people all the time, your credit, you can get anything you want. Plug it in for me. You can get anything you would like to have. It's at the end of the day, what's the rate that you're paying? So if you have a $20,000 vehicle, you're approved. Oh God, Joma was approved for a Honda or whatever type of vehicle. I was approved, but hold on, let me just plug this in. But it comes back to your payments. Your payments, you're approved on a $20,000 vehicle when you could have gotten a much better, a better line of car, better vehicle for maybe $40,000 and making the same payments. It's all about the rate, and the rate is going to be the makeup of your credit score. So no one ever asks, what's my interest rate when they walk into a dealership? It's, I'm looking for a vehicle. The salesperson says, what's the amount that you're looking to pay? And they say, you know what, I can afford $300-400 a month. That's my budget right there. When you could have actually had the payments being $250, $200 a month, $199. How much of a savings is that? And that's why you must invest in yourself when it comes to, fixing your credit if it's not something that you can do yourself. And I tell anyone signs up with me, I tell them this is something you can do yourself. But again, like I had my first time homebuyers class last week, and it was so funny that because my hair wasn't done, and I was just like, oh my God, I have a wig. Let me throw the wig on. Let me tell you, Carly, when I try to put my wig on, okay, it was a complete mess. Okay, the camera didn't see it, but let me tell you, a close-up shot picture, it was the glue was all over the place. It was just a mess. But here it is, next day I went to the salon, got my hair done. And it's just being able to deal with someone that understands credit, is a professional of what they do. And it can be a quicker turnaround time. So if anyone tells you that, I'm going to put you on a monthly installment plan for 2 years. That's completely false.
Great. That's great. Great information. Lots of information. I have lots of questions.
Yes.
Because as you know, this is a relevant topic. So everybody has questions, and a lot of people are trying to do some things these days. So the first question I have, somebody said they have a 700 plus score, but they're trying to get to the top. Is there anything else they can do to get it higher?
Absolutely. And what my answer to one person may not be the same for another. Okay. So for this person that's asking the question, how many positive lines of credit do they have on their credit report?
They didn't say how many, but are you suggesting the more you have, the better?
No, the more the least is best.
Okay.
Because remember, we spoke about your FICO scores, what makes up your FICO score. And if you have too much credit, there's too many calculations to be done.
Mm-hmm.
If you have 10 or more, the average person should not have no more than 5 credit cards.
Mm-hmm.
I'm at fault where that's, you go into the stores and they're doing all these different offers. You apply for credit, they'll give you 20% off your bill. I love taking advantage of those things. But when I do, I'm tearing up the credit cards because I only want the benefit of what was being offered. And I like to save money. So for someone that has a 700 credit score and they may have 10 accounts, because you may have your mortgage. I wish that they would actually say, but for example, you have your mortgage, you have your auto loan, may have a personal loan, you have about 5 other credit cards that are being reported. To get your scores over onto get into the 800 is not to close out anything, but maybe you want to look at your credit card balances versus the limit. The magic number for that in keeping your limits is 30 to 35% of your line of credit. Okay. If you're maxed, because when you're maxed out on your credit cards, it's only telling the bureaus that you're choking yourself. You're over your spending habits and your spending limit, and that's not very good management for your credit. They say your credit reflects who you are. So if you're maxed out with your credit card, that means that you're spending too much of what you do not have. I'm sorry. And, to put this out, I've been at fault for this. We've what they say, not only the president, but also a client. When you have family members, you have friends that are always asking for help and they need someone with a good credit, you're always helping. So you want to make sure that to get over that threshold, be sure that you're 30 to 35% of your line of credit with your credit cards. The other thing is you want to look at maybe your credit limits, because sometimes you can have great credit, but not strong credit, where that you apply for new credit and you get approved for the $10,000 to $20,000 credit cards, the $5,000 credit card. Not having strong credit can also affect your credit score as well. Okay. So you can always, if you have great credit, you can call the credit card companies, whoever you have business with, and you can ask them for an increase of the credit limit. And based on your credit profile, they will increase. The other thing is that you want to look at inquiries. And I'm trying to be as generic as possible because I don't know what the credit profile, and that's why each person that comes to the credit group for help, we must do an evaluation of their credit profile, because we all have done different things. You have someone may constantly go to the hospital. You have someone that's, a lot of it are investors. They have great credit, but because they're doing so many different transactions, they have a lot of inquiries on their credit report. So again, it varies when someone asks that question, how can I get to that 700 credit score? Is based on your profile, the information that's being reported on your credit report, and how to really manage. Some folks, sometimes they call our office and we don't even take them on as a client because it's just an advice that we need to give them. And I do that all the time when they ask, what can I do to get my credit scores over the 700? Based on looking at their profile, it's a 2 minutes literally a 2 minutes conversation for me to advise them. Because if they're not able to become a client with me, I'm sure they have a friend or a family member that would need our help more than ever than they would. So, we definitely believe in education for one, building each person up so they can achieve their goal. We have clients that have their kids in school and need a loan because they're not approved for a personal loan or whatever that they're trying to do. So they really need that bump, because of that 720 would just get them to that tier 1 of credit, and they're able to do a lot more and acquire a lot more for themselves.
Okay, so we have lots of questions coming in, but 2 questions on that same subject, because you said one, that you go to the store and they give you an offer and you can apply for a card. And that happened to me a lot recently. You go to Home Depot, they want to offer your card. My thing with that is I don't want to do it because I don't want the hard inquiries on my credit report. Because all these stores running a hit on my credit card, I think that's a problem for me. So that's one of the questions I wanted to ask. And when you're answering that also, you can also answer. Somebody said if they already have the lots of credit cards, should they just cancel? Should they just cut it up based on what you just said, or should they just make sure they keep their balances below that 30% total? What's the best advice there?
The best advice with having too many credit cards, you sometimes don't want to close them out because closing out your credit card, it may lower your credit score. So just leave it there. If they're not charging an annual fee or a membership fee or anything like that, keep the card, because at the end of the day, it's neither here or there whether it's going to because you're not using it. But if you do close it based on everything is a zero balance and you may just have one credit card with a high balance, it definitely will affect your credit score. So just leave it as it is. But for someone that has a lot of credit cards, do your balance transfers with those. Because one, it'll do two things for you. It will actually show that you paid something off, but you really did not. So it brings you back down into that balance that calculates with your score. And it will show that new line of credit that you have that will increase the credit score for you. And you asked another question, I'm sorry.
The store, going to the store when they offering you all the free things. And like I say, let's say I went to Sam this morning, they offer me 25% and I apply and I get a card. Then I went Home Depot later and they offer me again. Aren't these all hard inquiries on my credit report?
Absolutely. They're all hard inquiries. And you have to know the difference between a hard inquiry and a soft inquiry on the report. I'm going to give you guys a website. You also have permissible inquiries as well. Permissible inquiries are things where that they collect your data, and remember I spoke about that scam calls that you get where they're selling your information constantly to different companies. That website, Paul, if you're on, you can put opt out. Let me put it out. Opt out. OPT. Opt out pre-screen. Okay, let me make sure opt-out pre-screen. Okay, now opt-out pre-screen is, you'll see a lot of different inquiries, the soft inquiries, the hard inquiries, and then you have permissible inquiries. A lot of time your permissible inquiries outweighs the hard and the soft inquiry. It's not so much that it affects you because they're only viewing your credit report just to, see if you're a good candidate for credit, okay? That website you can actually go to and opt yourself out of opt-out pre-screen. You can do 5 years, you can do indefinitely, meaning that when you go to the mailbox, the only thing that you want to see is your bills, right? It's always that you go to your mailbox and you're just getting a ton of all these junk, I call them junk mail. And sometimes you even mix them up with the real bills because they could look so real. Okay, go to that website, opt yourself out, because when someone is looking at your credit report, they can actually see that you're pulling your credit for the things that you want. Okay, and I don't care whether you're a realtor, you're a mortgage broker, not everyone understands how to read a credit report in its entirety. Okay, but
don't take all the store cards, because those are all hard inquiries. I mean, the offers.
Yeah, I would not. I stopped doing that. In these days that we're in, you're buying the things that are most important. I don't shop anymore. I shop so frequently. Let me change those words. So frequently. I shop for my girls maybe every 6 to 8 months. Okay. And what I do, I call Macy's, because when you have a credit card with Macy's and you're a platinum member, you have access to like a stylist. Okay, at the Aventura Mall, they have that. And because I'm always traveling, I utilize that service. My stylist is Zen at Macy's and Aventura. Tell her I sent y'all, okay?
Mhm.
But I would say, hey, Zen, here's my budget for the girls, especially summer is coming. And I would just say, this is my budget. She shops for me, and that's it, for me. But those hard inquiries, they affect you so much. Sometimes I see folks that lose 200 points, 150 points, 60 points, 4 points. And it matters because the scoring modules have changed for lending. Some months ago, you were okay at a 620. Then it bumped up to a middle score of what the bank need to approve you for a loan. It was okay for you to be at a 620 credit score. Then they moved that to a 640 middle score. Now you have to have a 650 middle score in order for you to be approved for a mortgage. If you don't have a six, and the other thing, you can't have not even one single collection account on your credit. An outstanding collection, that is. So if for someone that is going to apply for a mortgage, be mindful and remember, don't look at your Credit Karma and say, oh, I'm at 680 on Credit Karma, so that means I'm a 680 credit score person. No, it does not mean that, okay? You have to have, because there's different platforms of scoring. You have your mortgage, you have your auto, you have credit cards. And then a lot of times, not all credit card company pull all three bureaus. You have some companies like BJ's. BJ's only look at Equifax and Sage, or sometimes they just look at TransUnion. And I've been trying to figure out that myself. Is it the different stores location and why they do that? Or it's just what their system, how they do their system. But for BJ's, I've noticed that they pull Sage credit report a lot as opposed to any other bureaus. So you have to know when you decide that, yes, I would like to purchase a new car, what bank you're going to, what credit union you're going to, what is my real credit score, what I have. For me, I don't think I've ever purchased a vehicle, not to brag and boast, but I will never purchase a vehicle where I have to put $10,000 down. That's crazy. That is ridiculous. In putting 5,000, 10,000, you should just be paying your taxes, your insurance, and drive. Sign and drive.
Okay.
Go ahead.
Okay, thank you. We have a lot of questions. I'm going to go real fast now because they're pinging me that I'm on the hour mark, but I have so many questions. Guys, we will have a part two. We'll definitely have a part two to complete some of the things, but I'm going to go through the questions. So we have a lot of viewers from Canada, and they wanted to know, does this apply to Canada also? Is it some of the similar things, or if you know, if it's the same that apply to the credits in Canada?
Absolutely. Same thing. It's just like with credit in Jamaica. They do things a little different. We're also partnered with Credit Info in Jamaica. We have an office in Jamaica. I'm in Jamaica right now.
Take us with you.
Thank you.
We all want to be there.
I know, right? Oh my goodness.
Stay safe though.
I definitely am. I don't go out much, unless I have to. And I try to do things Zoom, but when I do need to meet with the bureaus, of course I have to go there and do things in person.
They use the same bureaus in Jamaica?
Yes, they do. They do. And we're able to, I've been speaking about this, I wanted to do at the end of the month where we're able to do a class because there's a lot of dual citizenship holders that are in the US as well as Jamaica. So I have a lot of those clients. I have a lot of my clients that are coming back to Jamaica to start their business. But I can tell you guys this, that they're also not only looking at your TRN number, but they're also looking at your credit report in the US as well. So both have to be on a good wavelength. And for how for Jamaica, they read their credit reports a little different. Having no credit here is a bad thing. You have to be in debt here in order to have credit. For the US, it's no credit. Um, it's no credit. That's good credit. Or, it's easier for you to start immediately when you gain a new line of credit and it's reported to your US credit report. Your scores pop right up. I work with a lot of attorneys that they would send, immigration attorneys, where after their client have gone through the process, they now have their social, they refer the clients over to us that we're able to build their credit up. So they're not going out there applying, because a lot of times when there's no credit, it's very difficult for you to obtain credit. So it does apply for Canada. Canada use the same scoring modules as well. They're not any different in how reading the credit report, but I've noticed for Jamaica, because they've only 10 years in and active in the past 3 years, and we've been here 3 years now.
Okay. There's a question about the FICO, but I know that's going to take you a little long. So let me ask you this quick one. Analyst says you have too much access to credit and turn you down. What should you do to counter this?
Yeah, you can do balance transfer, pay some things off so you don't have so many balances with different credit cards. That means that you're just using too much credit. So if I were you, if let's say you have a credit card with a $10,000 limit, but there's another credit card with a balance of $2,000, I would actually do what you call a balance transfer. Using that $10,000 line of credit, it would increase your credit score, and it would show that you're managing yourself properly, because that's where the algorithms would be reading when it comes to your credit score, that you're paying things off, but you're really not paying it off. You're just doing the balance transfer onto a new card and just having one credit card with a huge balance and paying those bills monthly.
Okay, thank you. Another quick question. Are the credit cards that offer cash back the best form to have? How best can they work for you?
Those cashback credit cards, are they the best for you? Not always. It depends on for you personally. For me, because I travel a lot, the points are very important for me. As you mentioned, Carlene, you were in Sam's. Sam's may give you 2%. I think when I did mine, it was like 2%, and then you got cash back, or is it cash back 2%? It's been a while now. That worked for me because I have a big family. So taking advantage of the cash back was really good. My Discover card has a cash back, and I like to get all the different, incentive I can use on my Amazon. So that was great in using the cash back. So it just really all depends on your choice when it comes to a cashback credit card. But what I can tell you this, on a cashback credit card, if you ever go delinquent, God forbid that you ever go delinquent with a cashback credit card and you owe them, it's gone into a charge-off status of, let's say, $5,000. It's a very hard account for you to get a great settlement, meaning 20 cents on the dollar of a settlement. They're really not lenient when it comes to settling a cashback credit card. So for me, I personally only do cashback when it makes sense for me, like Sam's, where I go very often, as well as the American Airlines. That works well for me as well, with the Discover, Amazon, because I shop on Amazon a lot. And I've noticed that's even more frequent since, we're quarantined, or we're in the pandemic right now. I'm not going out to shop. I'm just not doing it. Okay. Next question.
Okay. So you said you talked about building the credit score. We talked about doing the authorized person in the piggyback, doing the secure card, and you said doing the credit, like for example with your group, that's quicker. When you say quicker, is it a length of time? Is it 6 months, a year? What's the length of time to see it on the report?
Okay, normally with our credit builder program, it's a boost for our client. We report that information on the credit report showing an unsecured line of credit. When the unsecured line of credit is showed, it means that you've acquired credit on your own, which is a big difference with credit scoring. So you've acquired this account on your own, and it means that, quote unquote, your credit scores are great. Okay. We allow it to stay on our client's credit report 3 to 6 months, no more than that, because the line of credit is only to give you a step ahead. Okay. When it's reported on the report, now you're able the following month, you can go on and you can apply for additional credit to begin to build credit on your own. And it makes it a lot easier, because how you gain credit is by having a start. And without a start, you cannot get approved unless you're going to do the secured line of credit. So again, we turn a blind eye and we're able to report to all 3 major credit bureaus, get you a kickstart, boost your scores 50 to 100 points. When that happens, you can now stand on your own, build on your own, grow on your own, establishing your own credit, getting approved for the things that you want. And then, of course, 3 to 6 months, we are going to remove it from the credit report.
Okay. FICO score, credit score, different types of FICO score. What else does all that mean?
Well, basically, you have the part of the FICO score, which means that how you pay your bills on time. Okay. How well how much debt that you have. Then you have your FICO score for your secure credit card, for a secure line of credits, for how you manage your debts. That's where your FICO scores are coming from, how well you pay your bills on time. So that's why you have to, then you have your mortgage FICO score, and when you're purchasing a home. But for each, like I said, for each person, it varies based on their credit report. And that's why, there's so many different platforms for you to understand, where is my FICO score? Go on to FICO.com or Fair Isaac and Company, Google them, and you put your information in, and it will tell you what is your FICO score. Your FICO score tells you how you pay your bills on time.
Okay. There's a question on bankruptcy. I know that's a big topic, but we just asked one question about it. How
Yes.
does that affect your credit score? Does it stay on your credit report?
Yes. Bankruptcy affects you greatly. And it's so funny, in the past years, it's been flip-flopping between, and I'm going to bring it back. We haven't touched on that, but for foreclosures, okay? A couple of years ago, having a foreclosure on the credit report was like the worst thing on the face of the earth. Then it was another time where having bankruptcy was the worst thing on the credit report. And now, in this day and time, bankruptcy is looked at very badly, because no one wants to touch anyone that has filed a bankruptcy. And because so many people over the years have gone through, because of the whole bubble that popped, the different balloon loans, the different type of loans that were being offered were not legitimate loans. People were doing the fake W-2s and the fake pay stubs. So foreclosures are no longer looked at in the eyesight of lenders of being so bad. It's now the bankruptcy that's really being looked at. So if you can avoid from filing a bankruptcy, for example, I had a client Friday, I was speaking with her and her husband. They're in a foreclosure situation. So their home is $500,000. They have a business. It's not so much that things are now looking better for them. So they've passed the worst. So they're looking to file bankruptcy. And this is what the attorney advised them. And as a small disclaimer, I am not an attorney, okay? The attorney advised them to file bankruptcy. My advice to her, with my disclaimer, is that, listen, unless you have a summary judgment hearing that there is a sale of the property that is gradually approaching within like the next week or two, that's when you want to file the bankruptcy to stop the sale date of the property get on back a repayment plan to save your home. But the trick to that, remember, as husband and wife, we share a lot of things together. We're piggybacking on each other's credit. We're on the mortgage together. We're on the car together. We're on the credit cards together. We're on everything together. Ladies and gentlemen, separate yourself. Because
bye.
I'm out. Separate yourself, because if one person go down, you both go down. Okay? You both. I'd rather you say, honey, come to the mall with me and swipe your card. And a lot of times you would take your husband's card or your wife's card and you swipe it. They don't even pay attention. That's why fraud is so high. Okay? But my advice to that is bankruptcy stays on your credit, depending on the bankruptcy that you file, 7, 13, or 11. It's going to stay on the credit report the 7 to 10 years. However, the credit group do remove bankruptcies off the credit report. The only thing is that we do not guarantee any removal of a bankruptcy, but we're at about a 75% success rate in removing bankruptcy from a credit report for our clients. And that's why we don't guarantee the removal of a bankruptcy. But when it's removed off the report, it makes the credit look better. Okay?
Very good.
It's all about how you're presenting yourself. No one needs to know that. Like for me, I was a year ago, I don't know if Pastor told you this, Carly, but I was in a really bad accident. Okay. My entire face.
You heard
of, okay.
You heard about it.
I didn't even do things like this anymore. I cut it out completely, with, showing my face, because it touched on my emotions. But of course, here comes the medical bills. Okay. And it was a ton of them. Okay. With doing all of that. And I considered, and I said to myself, you know what? I'm doing too many things. And especially when you're a financial advisor, you cannot file bankruptcy. Depending on the type of line of work that you do, filing bankruptcy, you can lose your job, you can lose your license. So if you can, stay away from filing a bankruptcy, because I've seen persons that they're only in debt $10,000, $20,000, and they feel that because an attorney told them file bankruptcy, they went ahead and filed bankruptcy when it really wasn't necessary. Because depending on the bankruptcy that you file, you still have to get into a repayment. And the myth is when you file a bankruptcy, you're wiped clean. That's how it's advertised, right? Wipe your debts clean. When you file bankruptcy, it doesn't mean that it's going to be removed from your credit report. It's only going to zero out, depending on the bankruptcy you file, of course, but it's only going to zero out that debt. And after zeroing out that debt, you're going to have discover, zero balance / bankruptcy. So it's a long list of all of your accounts. And the moment they know that you file bankruptcy, all your creditors are going to start closing your account, closing. So back to with the couple, my advice to them, so she did advise me, I think it's in June that they have their summary judgment hearing. And the summary judgment hearing is what's going to set the sale date of the property. So my advice to her, if you guys are going to, if you haven't resolved the refinance and finding a lender, because we increased the credit scores, but at the same time, there's very few, if not no lenders that's going to refinance the home if it's in a foreclosure or forbearance status, unless they go to like a hard money lender. So my advice to her with this, listen, this is your home. There's a ton of equity in your property, lots of money that's there. Stay away from the bankruptcy. Try to find a hard money lender, refinance your home, because hard money lenders are about 10% these days. They're not like 14 and 18% as they were a couple years ago. They've gotten a little bit better with their rates. Refinance with a hard money lender, and as quick as possible that you're able to show 6 months of on-time payments, then go with a lender to refinance your loan and pay off, as opposed to do the bankruptcy. But if you do decide that you're not going to go the 10% interest rate, then only one of you file bankruptcy. It doesn't have to be both. Okay. One of you file the bankruptcy, stop the sale date, do it all over. So if your situation does not change after the one person filed the bankruptcy, the other person about a year or 6 months, because foreclosures are taking so long, you can always use that get out of jail card again with your husband or who the opposite person that filed the bankruptcy. But bankruptcy these days are looked at very bad. So if I were you, I would try my very best in staying away from them. And it's also very hard for you to build credit back again with bankruptcy. Before, a couple years ago, you filed bankruptcy, everyone was knocking on your door for new credit. Here you go, start fresh. You're back on the road again. But of course, you're only going to get those credit cards where the moment you get the $300 or the $500 credit limit, it's already maxed out. So I don't believe in credit cards like those. The first, I hate to say any name, but it's the obvious, the First Premier, the Credit One. Try your best to stay away from cards like those, because the moment you get those credit cards, they're actually maxed out the moment. So you're giving away free money. And unless I'm given to a meaningful platform, that's what I'm giving. And anyone will tell you, I am very giving when it comes to supporting anything, nonprofit organizations, churches. I love to give back, and I've done that because I feel that my blessing just continue to flow always.
Amen. Amen. This has been awesome. This was a life class. So Joma, tell us how we get in contact with the credit group. Or one person wants to know, you mentioned first-time home buyers. So they want to know what you do for first-time home buyers, and tell us how we get in touch with the credit group.
Absolutely. Thank you for that. So with the first-time home buyers class, it's a Zoom class like it is now. You have the buildup of the lender. So sometimes it's SunTrust, sometimes it's BB&T, it's sometimes Fifth and Third, all of these different mortgage company. And I have to give a plug for Housing Foundation of America as well. So you have the makeup of the realtor, the mortgage broker, the credit analyst, myself, the inspector. We also have a little budgeting class as well, because many of us, we just get the check and spend it, okay? And many of us, as grown as we are, we do not know how to budget, okay? We do not know how to be disciplined.
That's a whole nother class that you're going to have.
A whole nother. And a lot of us feel that because, my paycheck is only $300 a month or $1,200 a week or $300 a week. They should not budget. They're living. Yes, you can budget on any of those amounts. You can. Budgeting is very important. But how to get in touch with the credit group, please give us, our number is 954. I put it in here, 954-318-2935.
Okay, tell them MLSF sent you.
Absolutely. Absolutely. We have so many companies that refer business to us, whether it's the bank, the real estate office, the mortgage company, the nonprofit organizations that we work with. We want to know where our referrals come from, because we do the donations, we give our referral fees, because your organization needs help as well as you're supporting us as a business. And anyone that within an organization, let's say, for example, the different real estate companies that we work with, they've been referring business years, 50. I have referral partners for 10, 15 years now, 20 years. That's been with me from day one, that has not stopped referring clients over to us. Elias D'Souza, one of our referral partners, and he's an attorney. He was also in the credit industry as well. But he's out of it, and he refers all of his clients over to us. BB&T, SunTrust, Housing Foundation. It's so many. Michelle Richards, Phillip, Sharon Wild. Like, our referral partners go. Angel Willis, she's in Boston. She's a realtor. She refers today alone. Angel Willis referred us 3 clients. So we pride ourselves and keep the connection and build our relationship with our referral partners. Because without our referral partners, the credit group would not be where they are now, which is to open an office in Jamaica, support myself, my family, my team. I'm not a one-person operation, and I know a lot of times it gets so crazy at times that running a business, having a family, you're multitasking, that everyone will call to ask to speak with me. Don't worry, I see every file. Nothing misses me. If you call me, I make it my business. If you do call the office, you speak with someone else. All of my staff has signed a confidentiality agreement. Okay, which means that let me get Jamaican with us real quick. Una better not tell nobody. Una
Keep your
better not,
business.
Una better not tell nobody business, because we do have elite clients that we service, whether they're celebrities, commissioners, and for one of our commissioners that I can say because he has provided a testimonial to the company, is which is now our mayor, Mr. Wholeness. Okay. Years ago, Mr. Wholeness came to us and we were able to take care of him. And any question that he continued to have, he always, hey, Joma, what should I do? And that's to show, okay, this is a man of integrity. This is a man that is such an upright citizen. He's running the county so well. And that's just to give an example that we all can be in a situation this fast. Okay.
So in addition to credit, what else does the credit group do? Because I heard you said financial advising at one point.
Yes. So for the credit group, we do the consumer protection. Consumer protection mean that we're not just, for contacting the creditors, disputing items with them. We're also settling debts with the different companies. We're adding trade lines to the credit file for them. We're looking at if you've been a victim of identity theft, which many of us, and a quick tip for that, if you think that you've been a victim of identity theft, a quick way to tell, go on to annualcreditreport.com, okay? And pay attention to your address. Because you're going to have your personal information, meaning your name, your date of birth. It doesn't always show the entire social. And then it comes down to all the addresses before it gets to your creditors, okay? Look at all your addresses that are listed on your credit report. And that if you see an address that you have no clue, you don't know, and you're like, wait a minute, where does this address come from? I've never lived here. That's a clear indication that someone may be using your information. Okay.
Interesting.
Yeah, that's a first clue. And it's not always that someone would use your credit, like how well and how high your credit scores are, to steal your information to use for financial gains, but they also use your credit for work purposes. Okay, so sometimes you have two jobs that you don't even know about. And no, I'm telling you, yeah, or they make up another driver's license with their picture and your information. I tell folks that I have friends in on every different level of life, okay? Because I have to understand how they think and what they do and how to educate consumers to protect themselves. So it's not always that, given your information is used for only credit purposes, applying for credit, but it can also use for driver's license, employment, or just having an ID. And it's just the time and day that we're living in right now.
Wow. Well, this has been a great, I think, hour and a half. We started at 6. It's almost 7:30. Yes, it's almost an hour and a half. That's how interesting it was. Really good. Because this is like I said, it's a life class. We all need it. Every person who's listening to this or who will listen to it when we share it needs this. You need credit to survive in America. You can't live without credit. You have You cannot function, you can't live, you can't work. So you need to understand it. And again, sometimes lack of knowledge, the Bible said, lack of knowledge, the people perish. And we perish because we didn't know. You think it's a good thing to have a wallet full of cards and say, look, I got lots of cards. So we really need this knowledge. I just want to, on behalf of the Madge Lewis Scholarship Foundation, to thank you, Joma. Thank you for your time
Thank
sitting in sunny Jamaica and
you.
sacrificing your time to spend time to educate and to share your knowledge. We really do appreciate it. So I'm going to ask all those of you watching to share this live. Make sure you share the information with someone. We're getting a lot of comments. Excellent presentation. Very good. Please share it, guys. Remember, we're trying to help. Mad Lewis is about helping and sharing the knowledge. So don't keep it to yourself. You want to help others so they'll be able to get that job, get that car, get that house, move on in life. So we really want to share this. It's a great time to share this information. Please do so. Please reach out to the credit group and to get the information you need. If you can't do it by yourself, I always say if you could do it by yourself, you wouldn't be where you are today. So if it's bad, you need help. So if you need help, just be honest with yourself and reach out to get the help. And like she said, it's not like the company that's charging you $50 a month for 5 years to fix a credit that can be fixed in a year. There's a fee. Of course, there's a fee, but it's going to help you to get where you need to go. And remember, bad credit makes everything expensive. Like she said before, if your credit is low, your interest is high. So you're paying hundreds and hundreds of dollars for the mortgage, for the car, for the other stuff that people with the same thing or better car, better house, bigger house, less payment is paying less for because of your credit. So even though you have to pay a fee to get this right, you can realize that saving like this in quick time. So we've all been there again because we didn't know better, but we educated. Now we're smart enough now to make wise decisions. So we all going to take advantage of this. So again, please share the information, reach out to the credit group, learn more about MLSF by going to www.mlsf.org, www.mlsf.org. That's our website. Go to our Facebook page, follow us on Facebook, follow us on Instagram. Every week you'll get some knowledge. We're doing this financial series. We have more things coming up. We're going to be talking about investments and bitcoins and stuff that I don't know nothing about, but I'll be here because I'll be here to learn. So please, guys, let's come in and join and learn. Again, knowledge is power. We perish because of the lack of knowledge. Absolutely. Thank you so much, Joma. We appreciate you.
Two things that I would like to add for anyone that is applying for employment, and those employers like TSA, they do a credit check. When they sign up with the credit group, we provide a letter to them that they've enrolled into the program, and they're able to show the employer that letter. So they're able to keep their application on hold. We give them a time frame of what's a turnaround time so that they don't apply for the job and it just gets tossed to the side. We do a lot for whether it's our TSA workers, our government employees. We do provide a letter so you're able to give to the employer, because you will not get the job unless your credit has been taken care of. And the reason why they do that is because they don't want they feel that you may put your hand in the cookie jar, okay? Meaning you have access to, there's so many people that are involved in a lot of criminal activity. And you have the say-so of a punch of a button or a blind eye of looking past something that's going past you, especially with the TSA workers. So they know that they're offered so many different things. So they feel that if you're struggling with your finances, this is why they do not want to hire you, because you may be easily tempted in taking the offers.
Kickbacks.
And the kickbacks. The other thing, I didn't mention my personal IG page, as well as the credit group page. In my profile, you'll see on Facebook, Building a Better Credit Score. That's our Facebook page, our like page. Please go on there, like the page. My personal IG page is Best Credit Girl. Like I said, that's my personal page. But we realize social media, everyone is on social media. So please follow us so that if you ever lose my contact information, you can say, hey, send her an inbox or send her, what do you call it, DM? I'm getting good with social. But thank you for having me. I love speaking. My 20 years of being in this industry. I didn't tell you guys, but worked for an attorney for 5 years, worked for the state attorney for about 3 years, and doing a mortgage processing. Years ago, I find that folks were just being denied, even though it was a lot easier with the credit. But for the myth that was around credit repair companies was so bad, it was, oh, they're thieves and they don't do the job properly. And I just said to myself, I want to change this. I would like to change the stigma. And here it is 20 years later, the amount of folks at the credit group, because I can't take credit for myself, I have to take my staff. They are amazing because on days that I'm with the kids and being mom, they make sure that things get done. So I applaud them as well. And thank you guys so much for having me on this platform.
Thanks again. Thank you, guys. Have a great rest of the evening. And Joma will be in touch for round two. There's a lot more to learn.
Okay.